Hello aspirants and welcome again to Legacy IAS Academy. As the prelims are fast approaching, we are bringing to you one of the most detailed PYQ series. I'll be taking up the economy PYQs starting right from 2015 up to 2025. Now, this is not your usual PYQ series. This will be quite in detail. What we will first understand here is that what at the macro level, what are the kind of questions that are coming, what are the level of difficulties that are coming, and break it down into each and every chapter of Indian economy and take it chapter wise. Not just that, we will also try to understand what are the sources that UPSC is referring to ask you questions and why are they asking you those questions. All these reasons would also be discussed so that it helps you prepare for those topics in that way. In addition to this, we will also be looking at what are the other relevant or related topics that you should be doing which are related to the particular question that has been asked, because what UPSC does is it definitely repeats the theme. So if a question on a particular concept has been asked last year or the previous year or the year before, then what are the other topics related to that particular concept or directly or indirectly that you should be doing. So if any serious aspirant does this religiously, they can ensure that they will be thoroughly prepared for their prelims exam. So let us get started with respect to Indian economy's detailed analysis of the last 11 years is what we will be looking at. So the first things first is the difficulty level that we will see. So I do understand that when you are actually giving the exam, there is a high amount of pressure, but of course, still there are questions that will be easy, that will be of medium level, and questions that will actually be difficult as well. But if you have a look at the difficulty level of Indian economy paper or subject for prelims, you will realize that the majority of the questions are either easy or of medium level. That means the amount of questions that are difficult are quite less. Whenever I take my classes, in the very first class, I tell them that if around 15 questions of economy are coming, a serious aspirant who is thoroughly prepared with multiple revision should be able to solve around 12 questions. Those 3 questions, 12 plus questions, those 3 questions can be at times difficult, and in prelims, you should also know the art of leaving the questions. So there should not be any ego solving of the questions. You should respect the question and leave it at times. So let us see how this pans out. If you look at, so this analysis is of course for everything. We will start from 2015 and go up to 2025. Now if you look at total number of questions were 21. If you combine the easy and the medium ones, you get around 18 questions, and only 3 questions were supposedly difficult. Now let's not go into detail how we classify it, but briefly I'm going to tell you. See, if the question is very basic, conceptual, even the concept is quite basic, if it is present in the standard sources, the standard books, the NCRTs prevalently, then we classify as quite easy, right? But if the question, though it is present in the standard sources, but a bit difficult, a bit factual, or 2-3 logics in the statement, then it can 2 logics in the statement, it can be medium level. Difficult means it is not directly present in your standard sources or quite be too much factual, so on and so forth. At times there can be questions which were not mentioned in your sources but can easily be guessed or answered, so that can also at times be classified as easy questions. Let's move ahead in 2016. That's the year when I gave and cleared my prelims, and in this year you had around 23 questions of economy. 7 were easy, 10 were medium, and 6 were of difficulty, which were difficult. The difficulty level was high, it were difficult. So the number has increased, but still 17 questions are easy to medium. In 2017, again 23 questions are easy to medium, probably the most easiest year for economy. Then 2018, 17 questions out of 20. 2019, you have 15 questions out of 23. Then 16 out of 20, 13 out of 15, so on and so forth. So as you can see here also, 11 out of 14, 15 out of 18, 13 out of 15. Again, easy and medium actually rule the economy subject. And only the year 2025 you can say is 6 plus 5, 11 where easy to medium, and 4, that is a good percentage, but still 11 questions were easy or medium. In fact, in the difficult one of you were asked numericals, but they were quite simple numericals. See, as an engineer, I know that if you understand a concept, you should be able to solve the numerical so I do that in the class itself, we do it. And UPSC happened to ask the numerical. So what happens is, people get bogged down by the numbers that are there, the calculations that will be there. But see, the calculations and stuff is there for CSAT. UPSC is not going to test your calculation levels in GS or in the first paper of prelims. They are simply trying to test your concepts. If your concepts were thorough, you should have been able to solve that. So this is the difficulty level. It is quite promising, encouraging as a fact that we should be able to solve 80+% of questions correctly. Let's move ahead and let's now look at the topic wise distribution that is there for the economy subject. So the highest number of questions have been asked from external sector. However, I'll tell you that banking and all, I have segregated the banking. So if you take banking as a comprehensive chapter, it will have the highest number of questions. And in external sector, a lot of things are included. For example, foreign exchange, foreign trade, you have the balance of payment crisis. You will also have the international economic organizations included. That is why the number shoots up. But anyway, external sector, very, very important. Also because whenever there is external sector, foreign exchange, foreign trade, you have to apply that logic and then transfer that logic to India and then see what the answer is. For example, if the let's say the policy rate of the federal bank is increased, how will it impact India's investment, India's foreign investment? So what is happening here? You have to first see what does that particular thing do and then apply that logic in India. It is not directly applicable. So this external sector becomes quite crucial. Then you have agriculture. Around 24 questions are being asked. Agriculture plays a very important role both in prelims as well as mains. In mains also, in mains half the question are from agriculture as per the last 5 years trend. This may change. So the trend can change, but this is as of now the trend. Fiscal policy and government budgeting. So this is the static part of the budget that the government brings out every single year. So in fact, in the last year also 2025, there were around 3 questions from this particular topic, wherein they asked the numerical, both the numericals were from this particular topic. Then you have banking and its regulation. Now banking and its regulation I have bifurcated, or else you could have added banking and its regulation, monetary policy as well 8, and money supply again 8. So 16 plus 21, that is 37 plus. Here you have payment ecosystem also 7 questions. So a total of 44 questions from banking and the related chapters that are there. So banking would then top even the external sector. Please keep that in mind. Then you have the financial market. Around 20 questions are coming from them. Then the very first chapter that we take up for Indian economy, of course, after teaching some amount of basics, introductory chapter, then the basics, the very first thing that we take up is national income accounting, and that is what we will focus on today. We will go topic wise, detailed analysis is what we will do. So today we will be covering the national income accounting, the 8 questions that has been asked. Then you have inflation and recession, 6 industries, 6 energy, 6, and then labor and employment, 5. Now we are coming down to the small topics or subtopics that are there. Social security, 4 questions. Then you have skill acquisition, human development, infrastructure, 3 questions each. Land reforms, 2 questions have been asked. quality, standardization, digitization. 1991 reform, 2 questions have been asked. On poverty, 1 question has been asked. And then, so all the things that you have seen so far is related to macroeconomy and all. Now, as far as microeconomics is concerned, hardly any questions are asked, but yes, we do cover that as well in the class, because at least 1 question, whenever the question is asked, they ask the entire 1 question. So if in the last 1 year 3 questions have been asked, that does not mean 0.1, 0.2 questions every year. They ask 1 question, so that also plays an important role. And we never know, next year UPSC might add few more questions from microeconomics. But as of now, the scene is, if you look at, this is again planning, this is a part of macroeconomy also, macroeconomy only. So 1 question, this is your microeconomics. So in the last 11 years, only 2 questions of microeconomics have been asked, and that too quite straightforward with respect to law of demand and opportunity cost. Right. So this is the breakdown of the questions that have been asked. Now let's quickly jump in to the very first topic that we will analyze today, that is national income accounting. Right. So we'll take up first national income accounting. How many questions have been asked from this? A total of 8 questions have been asked from national income accounting. Right. Now let us look at the question. The question says that a decrease in the tax to GDP ratio. A decrease in the tax to GDP ratio of a country indicates, they're not saying it will necessarily happen, it talks about indicates which of the following. Statement 1, slowing economic growth rate possible. Less equitable distribution of national income, is that possible? Probably not. So what is tax to GDP ratio? Whenever you have A to B ratio, what is this? A upon B. So tax to GDP ratio is simply tax upon the GDP. See, when the tax is buoyant means the tax collection is in proportion, in fact higher than being in proportion than GDP. That means GDP might be increasing by X percentage, tax collection is also increasing at a higher percentage, so that means the tax is buoyant, the tax collection is exceeding the GDP growth, right? That is what happens when the economy grows, right? But if the tax to GDP ratio is going down, that means the tax collection is declining. When will the tax collection decline? When the GDP is going down. When does the GDP go down or does not increase much? When there is a slowdown. So in a slowdown scenario, the tax is going to go down by a sharper amount than the decline in the GDP. That means what? That means that this reduction or decrease in tax to GDP ratio would be corresponding to a slowing economic growth rate. Slowing economic growth rate. So statement 1 is correct. Since statement 1 is correct, this is incorrect, this is incorrect, we are left with 2 options. Next is less equitable distribution of national income. Not necessarily the case, right? Less equitable distribution means higher inequality. Not necessarily. Tax to GDP ratio is going down, so tax collection is going down, and the GDP is also, economy is also slowing down. That does not mean that the distribution will not be equitable or will be less equitable. It cannot mean for certain either it will be equitable or less equitable. You cannot be sure. Hence, a decrease in the tax to GDP ratio cannot determine whether this is the case or not. So the correct answer here will be A, that is 1 only. Now, what was the source of this question? So this question is of, as we have seen here, this question is of 2015. So in 2015, it was in news wherein the then minister had mentioned about the need to increase the tax to GDP ratio to over 20% is what was said. You can see the article is of April 6, 2015. So it was in news. Based on that, the static portion was asked over here. So the correct option, as we discussed, is A. This is the explanation. You will be getting this PDF, so you can read the explanation thoroughly as well. But as I have said, in a growing economy, the tax revenues are buoyant. With the rise in the income, profits, consumption, everything will increase. Okay. Now, if there is a fall in the tax to GDP ratio, that simply indicates that the revenues or the tax collection is not responding to the GDP properly, and this typically will happen when there is a slowdown in the economy. Okay. At the same time, decrease in tax to GDP ratio simply shows that lower tax is being collected relative to the GDP. It in no manner whatsoever reveal how the income is distributed among the people. Now, the most important thing from this question for you to learn is, of course, you should know what the answer is, what all the concepts that we have seen. In addition to this, the most important thing for you to know here is that you should also be knowing the certain static concepts which are related. First, you should know tax to GDP ratio, which we have done. Tax buoyancy, you should study. Tax elasticity, inequality, how to measure inequality. These things you should be knowing. Let's move ahead to the next question. Again, in 2015, again from National Income Accounting. With reference to Indian economy, consider the following statements. Statement 1 says that the rate of growth of real GDP has steadily increased in the last decade. Since the question is asked in 2015, it is talking about 2005 to 2015, right? That is the 10-year that we are talking about. Now, even if you don't know it factually, you can still guess it. See, they are talking about rate of growth. They are not simply talking about the growth in GDP. They are talking about the rate of growth of GDP. So the GDP would have steadily grown in the last 10 years. But did the rate kept on growing more and more and more every year? For example, if in 2005 the GDP growth rate is 5%. Next year, if it is less than 5, we cannot say it is steady. It has to be more than 5, let's say 5.5. Then next year, it has to be further more than that, let's say 6%. Then next year, it has to be further more than that, and more subsequently, which is highly improbable. And this is factually also incorrect. But even if you don't know the exact growth rates, you can still understand it, because if they would have said the real GDP has steadily increased in the last decade, yes, easily possible, unless and until you have extremities like the COVID year that we had, or long back in 1960s decade. If you see, we had in 1960s we have 2 wars, one with China, one with Pakistan, severe drought-like condition. The percentage of agriculture in GDP was also quite high. So those are the decades wherein you could possibly think that the GDP would have shrunk, or else if not the extremity, then real GDP would anyhow grow. That is not a problem as such. But here they are talking about the rate of growth of GDP. For it to keep on increasing every single year for a decade, it's very difficult. First statement is incorrect, so this is gone, and this is also gone. You have the second statement, the GDP at market prices in rupees has steadily increased in the last decade. Simply they are asking that GDP has kept on increasing, in the sense that if it was 100 rupees in 1 year, next year it might have become 110, next year it will become 112. So here the growth rate is 10%, here the growth rate is 2% approximately, but it is still growing. The quantity is still growing. So yes, the GDP at market price, did it kept on increasing steadily in the last decade? Yes, it did. Remember, this is from 2005 to 15, not from 2015 to 25, because in that case, COVID year the GDP had actually shrunk. So if they ask you the similar sentence in 2026, it will be incorrect because of the COVID year. So be aware of the COVID year. So the correct answer here will be B, that is 2 only. Let's move ahead to the next question. Before that, of course, the explanation which you will get in this PDF, I have already explained it to you. It could be guessed easily. Why? Because they are talking about the growth rate. Rate is the important word over here. Now, the topics related to this which you should be studying is the concept of real GDP, nominal GDP, GDP PPP, GDP deflator, GDP at market price, factor cost, relationship between market price, factor cost, so on and so forth. And also remember, India last year became 4th largest economy of the world, but based on GDP PPP, India has been 3rd largest since 2009, and recently in 2025 India became the fourth largest, but without the consideration of PPP. With respect to GDP PPP, India is third. A similar question had been asked in a few years back, wherein the statement was with respect to PPP. So make sure what they are asking. Let's move ahead to the next question, again asked in 2015. So national income accounting was quite prominent in that year 2015. In the last 11 years, out of 8 questions, 3 have been asked in 2015 only. Let us have a look at this. The substitution of steel. The substitution of steel for wooden plow in agricultural production is an example of what? Option A, labor augmentation, technological progress. Labor augmentation, that thing which augments the labor. Augmenting means facilitating, means improving the productivity of the labor. So is it going to enhance the skill of the labor? No, it is not. Ultimately, the labor will be able to do more plowing, but labor's productivity or skill as such is not enhancing. It is what is getting enhanced? The plow itself is getting enhanced. What is a plow? It's a capital, right? It's an asset, it's an equipment, for example. Next, capital augmenting technological progress. Yes, this is the possible answer, but let us have a look at other options as well. Capital reducing technological progress. No, absolutely not. None of the above. Chalo, we can eliminate if we know this is the answer. But labor augmenting, not, it will be capital augmenting. See, because of this, the labor will be able to plow more, but that was possible because the capital got augmented. What did directly improve? Did the skill of the labor directly improve? Did the power of the labor directly improve? No. What improved is the equipment that the labor was using. Hence, it is capital augmenting technological progress. The correct option being B over here. Now, this concept is not covered in your NCERT, but as we have seen, it is easier to solve. How can you solve it? Just simply asking yourself the question that what directly improves with the change of the wood to steel? The worker improves or the tool? It is the tool that improves. Since the tool is the thing that improves, that is why it is capital augmentation. The static concepts that you should study related to this is factor of production, capital output ratio. In fact, we have written this capital output ratio, and in the coming question, there will be the question on capital output ratio itself. Let's move ahead. Increase in absolute and per capita real GDP do not connote a higher level of economic development if. That means your absolute GDP is increasing, your real GDP per capita is increasing. Per capita real GDP is increasing. This is per capita, okay? But that does not necessarily mean a higher level of economic development if industrial output fails to keep pace with agricultural output. Absurd, weird statement. So what if industrial output is not able to keep pace with agriculture output? Agriculture might be going at 100%, industrial output is growing at 80%. Still, it is an extreme growth rate. It still may or may not lead to economic development. So this is a weird statement, and a similar statement is also given here. Agriculture output fails to keep pace with the industrial output. See, whenever you get two similar statements in a question, or if two options are similar, I should rather say that, because statement wise more than one statement can be correct. But if you talk about option and you get two options which are similar, they are generally wrong more often than not. In fact, almost all the time they will be wrong. One of them would not be correct. In fact, when you have two options which are exactly opposite to each other, one of them is more often than not correct, right? But don't use these things for guessing when you're left with two options. All right, don't directly try to guess the answer if you are left with in the entire 4 options. Let's move ahead. Third, poverty unemployment increases. Yes, that is correct. Poverty, you know what is development? The not just the quantitative but the qualitative improvement. So unemployment should decrease, poverty should decrease, illiteracy should decrease, right? So these factors are maternal mortality should decrease, different mortality should decrease. All of these things contribute to the development of a nation. So even though your per capita income is increasing, your GDP is increasing, but if poverty is still there, unemployment is still there, that means economic development it means that economic development is not improving, or there is no economic development, or there is lack of it, is what it means. D, import grows faster than the export. Doesn't matter. The country can be quite rich, so it imports more and more and more. It has foreign exchange. It has, it might have an international currency also. So all this, it is not relevant. Poverty, and simple thing should be poverty, unemployment. All these things are related to the development of the country. We do this in growth and development chapter when we talk about, human development index. So in there, poverty, as in per capita income, is mentioned. Unemployment. Now, unemployment is also important. These are related. Now, you will say that the per capita income is increasing. So, how is poverty still there? See, because there would be high inequality. Rich becoming richer, poor becoming poorer only. But this will lead to higher per capita income, but poverty may still remain. So, the correct option is C over here. So, C is the correct option. We have a detailed explanation for this as well. You can go through that. Now, what has been the source of this question? Economy NCERT of 11th standard, Indian economic development, wherein in chapter 6, in the point 6.6, this thing is specifically, not specifically, but yes, mentioned. Using that, you can solve this question. Let's move ahead. The concepts that you should be studying with respect to this is employment and its types, absolute and relative poverty, tools to measure poverty, committees on poverty estimates, jobless growth concept also you should know. Right, let's move ahead. Next, 2018, this question is of 2018. Despite being a high saving economy, capital formation may not result in significant increase in output due to a weak administrative machinery. See, you may think this is possible, but then look again. Similar options are there. Illiteracy. If this is right, then this also has to be right. So these both similar options. Similar means they have the similar effect. Weak administrative machinery, illiteracy, high population density, all are similar options. So if I mark this is right, why am I not marking this is right? Why am I not marking this is right? That is the question. So here, all you need to know is the concept of capital output ratio. What is capital output ratio? It is capital divided by the output. If you have a high capital output ratio, that means what? You are requiring very high amount of capital and you are getting very small amount of the output. That is why the capital output ratio is high. And if the capital output ratio is high, even if there is a high amount of capital formation, it would not result in significant increase in the output because your capital output ratio is high. It's a very factual thing. In the previous question, I have told you with respect to one of the concept that you should be studying capital output ratio, and the capital output ratio question has been asked. Right? So I hope this is clear. Let's move ahead. D is the option here. So here is an example. If investment in an economy is 25% of GDP, and the resulting growth is 5%, then the capital output ratio is what? 25 by 5. It is high, right? Now, if the investment in the economy would have been 5% and the growth rate would have been 5%, then what is the capital output ratio? It is 1. When the capital output ratio is low, less amount of investment will give you higher amount of return, as you can see over here. Let's move ahead. 2018. This is the same question which was there in 2018. Yes. Now the source. Now this is where it gets interesting. So we talk about the NCERT's economy NCERT. Now there are things which are there with respect to capital output ratio, working capital, fixed capital, all these things, variable capital, all these things, or the variable cost, fixed cost, all these things are actually mentioned in your business studies NCERTs of 11th and 12th standard, specifically the 11th standard. So this question is also being taken from there. 12th standard business studies NCERTs of the 12th standard. So you should not read them entirely. You should do selective reading of business studies NCERTs, right? The static concept that you should study is incremental capital output ratio, capital deepening, capital widening, disguised unemployment, etc. Let's move ahead to the next question asked in 2022. Which of the following constitute real sector? Farmers harvesting their crop? Yes. What is a real sector? The real sector is a sector wherein the goods and services are actually produced. That's a real sector. What is the other sector? The non-real, or you can say the financial sector, which simply gives you loans, gives you credits, borrowing, lending money, which gives you resource mobilization. It does not produce anything. You take loan from the bank bank does not produce anything. You take the loan and then you establish an industry, produce goods, or establish an institute, produce services. You are the one producing the goods and services. The bank did not do it. So the real sector of the economy is that sector which produces for real the goods and services. So farmer harvesting their crop, yes, they are producing goods and services. Textile mill converting raw cotton into fiber, yes, producing goods and services. One is correct, two is correct. So 1 is correct, this goes out. 2 is also correct, this goes out. Third, a commercial bank lending money to a trading company is simply lending. So commercial bank is not producing any goods and services. So 3 is incorrect. So this is also gone. Correct option is 1 and 2. But still, let us have a look at 4. A corporate body issuing rupee denominated bonds overseas. Again, simply mobilization of the money, no production as such. So this is also incorrect. The correct option is A, 1 and 2. Next. Yeah, before going to that, yes, A, 1 and 2. This is the explanation here. The static concept that you should study is the primary sector, secondary, tertiary, quaternary, quinary sector with examples. This real sector economy question asked with respect to the IMF report on the real sector. But there is not a direct link as such. You could not have predicted this particular news leading to that particular question. Right? Anyway, let's move ahead. Next, in the year 2024, with reference to the physical capital in Indian economy, consider the following pairs. So you have the items and you have the category. So item and category. Item is farmer's plow and it is saying it's a working capital. Then you have computer, it's saying the fixed capital. Yarn used by the weaver, fixed capital. Petrol over here, it's saying that it's a working capital. Now, fixed capital means, see, for example, this digital board is a fixed capital. Now, if one of you are watching or hundreds of you are watching, if in this class one aspirant is there or 30 aspirant is there, still one board is enough. It's a fixed capital. I hope that is clear. So, in fixed capital, the thing is, the same amount of capital, the same capital can cater to an increasing number of requirement. So farmer's plow, is it a working capital? No, it is a fixed capital, right? Why? Because the farmer can plow a small area of field with it, or the farmer can plow a large area of field with the same plow. So it is a fixed capital. This is incorrect. Second, computer, it's a fixed capital. Right, through computer I can make 1 presentation, 10 presentation, I can keep on making presentations forever. So this is a fixed capital. This is correct. Yarn used by the weaver, is it a fixed capital? No. When, let's say, yarn, you are using yarn and converting into cardigans or sweaters. So if you want to produce 1 sweater, you will need, let's say, 2 bundles of yarns. If you want to produce 2 sweaters, you will need 4 bundles of yarn. When the production, when the output increases, the input is also increasing. That is what your working capital is. So this is not a fixed capital. This will be a working capital. Then fourth, petrol. Is it working capital or fixed? It is working capital. If you have to go longer distance, more petrol would be required. If you have to make multiple trips, more petrol would be required. So it's a working capital. So only 2 are correctly matched. That is 2 and 4. They have not asked which one. They have asked how many are correctly matched. So B, only 2 are correctly matched. Now, with respect to this, you can study the concepts of cash flow position, interest coverage ratio, debt service coverage ratio, return on investment, floating costs, etc. can be studied. Again, this question was taken from the Business Studies NCERT chapter 9, and from there also you can get all these concepts which are there. So selective reading of Business Studies NCERT can be quite vital. Let's move ahead. The next that was asked in 2024 with reference to the sectors of the Indian economy, consider the following pairs. The very first pair is which one? Storage of agricultural produce. Now forget it whether it's agricultural produce or industrial produce. They are talking about storage. So storage is actually in the tertiary sector. It's a service that you are providing. So it's a tertiary sector. So first is incorrect. Dairy farm, you have a farm over here, farming is done, and side by side livestock rearing wherein dairy products, or you can say milk, is produced, for example. So this is dairy farm, which is primary. This is correct. Third one will come later. There was confusion with respect to this in the UPSC market. We'll discuss that. Coming on to fourth, weaving cloth. So you are converting the fabric into cloth. So you are processing the yarn, the raw material, into cloth. Remember, yarn was asked in the previous exam, previous question. Yarn for weaving cloth, yarn being the working capital, as we said. Now this yarn is getting converted into cloth. So processing of raw material, converting into finished goods, it is industrial sector. It is secondary. That is correct. So two are perfectly matched. What about mineral exploration? Now mineral exploration, since they have given tertiary, it can directly be marked as incorrect. There were two differing views saying that mineral exploration can be R&D kind of a sector and stuff, and R&D sector is actually quaternary sector. But however, mineral exploration is simply the primary sector. It's a primary sector, so it will not, of course, be tertiary. This is incorrect. This is incorrectly matched. So only two are correctly matched over here. Now the source of this question is your NCERT, 9th standard economics NCERT. Now the static concepts that you can study with respect to this is types of goods. For example, you can study. Right. So these are the 8 questions that have been asked from National Income Accounting in the last 10 years. I hope you understood everything. You already know the concepts that we discussed, because it is high time. Prelims are approaching. And if you don't, please get thorough with those things, and also please focus on the things that I have told you to study with respect to these questions that has been asked. So that's about it for this particular section or chapter. See you again in the next chapter with respect to economy PYQ. So subscribe to Legacy IAS Academy, hit that bell icon so that you get the notification as and when we are coming up with the videos. Thank you.